Happy Friday, all. This is your market update for June 23rd. I hope you're having a great day so far. So there was a global manufacturing report that came out earlier today that showed contraction in the manufacturing sector that was the largest since December and could be another potential sign that the global economy is headed for a potential recession. Some would argue that we're already in a recession. Some would argue that we're not, and that we may not be because the labor market here in the U.S. continues to be resilient. Inflation numbers remain higher than what the Federal Reserve would ultimately like them to be. So regardless of what side of the argument that you're on, recessions do happen as a normal cycle of an economy. They do come and go. I think the major thing is trying to ensure that any recession that we enter into, because I think it's pretty much imminent, is a mild recession, nothing significant like the Great Recession that we experienced several years back. So that's certainly something to keep an eye on and watch the potential indicators moving forward to see if we get that official, green light, if you will, that we're officially in a recession. So certainly something to watch. Stocks started the day lower across the board and continue to operate in the red today. The Dow is currently down 250, NASDAQ down 132 points, S&P 500 down 34 points. After having a not so stellar day yesterday, the mortgage-backed security market did open the day positive today, up 17 basis points, and are currently up 25 basis points, so gaining back about half of what we lost yesterday, continuing to hit that level of resistance that we hope will eventually serve as a level of support moving forward, but hasn't definitively broken above that level of resistance for any long-standing period of time. So we'll continue to watch that as well. News coming out next week to basically keep an eye on would be Tuesday. We've got some new home sales reports coming out. Wednesday, we've got mortgage application data. Thursday will be pending home sales as well as initial jobless claims for this week. And then Friday will probably be the potential, the biggest potential market mover is the personal consumption expenditures report, which is a key measure of inflation that the Federal Reserve looks at very strongly. So we'll head into next week, hopefully having some good news that is interest rate friendly, but we'll continue to keep you updated, and I hope you have a great weekend.